welcome back to another episode of Good Question by CoinScheduleTV. I just got off the phone with Nik Patel, the author of an Alt Coin Traders Handbook. I really wanted to speak to Nik because I stumbled across his work when I was researching cryptocurrency trading a few months ago. His book is fascinating and it documents his unique approach to trading, and I wanted to get the inside scoop on how he does it all and where he thinks the markets are going, the potential role of institutional adoption and the potential for economic collapse. As well as all those subjects, we talk about many things, and Nik's a very good guide to go to if you want to get into the trading world. I highly recommend his blog, his book, and apparently he's got a new book coming out, so make sure to keep an eye out for that one too. So my first question to you is, how did you actually get into cryptocurrencies and why do you find them interesting?
Right, so I was just stumbling around on the internet, found the subreddit for Dogecoin in December 2013. I had no idea what cryptocurrencies were, what Bitcoin was, nothing. I've never even heard of it. So Dogecoin was the first sign of this technology that I'd seen and experienced, and I was just immediately kind of captivated by the community that was on there. I'd never even used Reddit before, so that was new to me as well. But somehow I managed to stumble upon that subreddit, and then from there I just fell straight into the rabbit hole, and I began researching what the currency was, like what was the whole idea behind having a digital currency. I downloaded the Dogecoin wallet, and I was like, wow, I have like 500,000 Doge, and it's like that was like $3 or something like that. But yeah, and then the one thing that I think really got me to stick within that space was tipping. Tipping was a massive thing, especially in like 2013, 2014, and people would just tip you Doge on Reddit, and then I was like, wow, this is kind of cool and kind of weird. And then from there, yeah, over the next 3 months, I became more and more interested. And then we got to March 2014, and I was like, right, I'm actually going to look at this as some sort of investment for the future, and actually like put my own money into it. I was working awful part-time job as a sales assistant at Dunelm Mill, perhaps the most boring place of all. So I was like, right, I took 150 quid out of my monthly pay and just put that into Dogecoin and Vertcoin, which was the second cryptocurrency I came across, and that basically begun my journey.
Wow, so that was 3 or 4 years ago. Well, nearly 5 years ago now.
5 years ago now, yeah.
So you're a proper veteran in the space by this point.
Yeah, I've seen a number of cycles, and honestly, like it's just been a wild west since I've been in it. Like even the people from 2013, 2014 will say, it's not, this past 2 years hasn't been as crazy as those 2 years. But I think both those periods were equally crazy in very different ways. I think the last 2 years has just been absurd in terms of mainstream growth, and I think the fact that Bitcoin itself became so big and popular and got to $20,000, and that was major headline news. But back in 2014, it was more about the fact that you were getting altcoin pumps inside 24, 48 hours of like 10,000, 15,000%.
Oh my God.
Which is just obscene. And it was because volume was so low back in those days and Bitcoin was so cheap that markets could be pushed in the most extreme ways possible and manipulated in all sorts of ways. There was no regulation, even though now we're starting to see some sort of regulation creep in. Back then there was nothing. There was a handful of exchanges that were, many of which aren't even existent anymore. They either exit scammed or just ran out of money, or something happened that ended in them no longer being able to run their service.
Yeah, this is true. And what I'm curious about is, were you interested in finance before crypto, or was crypto what initiated this interest?
So I was slightly interested in it. My dad has some background in sort of options trading and stuff like that. But I never really talked to him much about it. I was never really that interested in what he was doing. But from him talking in day-to-day life, I would get to know a little bit about what was going on. And but at sort of 17, 18, I didn't really care about finance. Like, all that really mattered to me was making enough money from my shit part-time job to then pay for my weekends out, and that was pretty much it. But then obviously getting involved in March 2014, just as that first mega wave of sort of altcoin bull cycles began, that changed everything. I became far more fascinated, and it proved to me that there is a lot of opportunity in this space.
Yeah, and it's only growing at this point. And so when you are trading, are you constantly selling off your earnings, or are you trying to accumulate Bitcoin in expectation of another bull run?
So I'll give you a little like history, because I've changed as a trader so much. I no longer actively day trade at all.
Right.
Maybe one or two trades a month will be sort of like day in, day out sort of thing. And they are usually in traditional financial markets like Forex or equities. I don't day trade altcoins or BTC USD. But that was how I began, especially in 2014 going on to 2015. I was doing a lot of active day in, day out trading, spending 8, 9, 10 hours in front of a screen. And then I sort of over time, my trading approach has gotten longer and longer, and it went from trading really short term, as in a few hours, to within a week, to within a month, to a few months, to now where I don't really have any set duration on a trade. I'm basically looking for undervaluation, relative undervaluation or overvaluation, and just playing between those lines.
Right, okay, I see. And so you're now generally investing for in excess of a year, presumably?
Yeah, I mean, some positions might be sort of 6 months, 3 months, but I have other positions that are 12 months plus, and it's mainly about, for me, I don't really look at it in the sense of I'm focusing on the asset itself. It's more about the asset relative to another asset. What is cheap and what is expensive? So when Bitcoin is cheap, I'm accumulating Bitcoin. When Bitcoin is expensive, I'm selling Bitcoin, and that works for all types of trades.
Right, I see. And are you bullish or bearish on 2019 as a forecast?
I would say I'm bullish.
You're bullish on 2019. Why is that?
Not mega bullish. I don't think this sort of bear market we're quite out of the woods yet, but I definitely think that the worst is out of the way. I'm going to go out on a limb and say that. I think we might get a sort of second dip just to flush everyone out, like a panic wick down to maybe 2,800. But as for a prolonged period of decline, I don't see another one coming. And I also think that we're going to get some sort of relief in the altcoin market over the next 8 to 12 weeks, regardless of what Bitcoin does. Ideally, it would be in range bound for those 2-3 months, because that would facilitate upwards momentum for alts. But I actually think, looking at so many charts, that we are now in a place where we've had probably the longest accumulation period in most altcoins history. Looking back over 5 years of price data, a lot of altcoins have never experienced such a long range bound period. And so I think we're due some relief.
And where do you think this release is going to come from? Do you think it's institutional players maybe getting involved in the space, or some other external factors?
No, I don't think this will be institutional. I think this will be the mega whales in the space, who have been here over the past few years and continue to manipulate altcoin markets. If you look at rich lists on block explorers, you can see that during this last 3 months, position sizes in certain altcoins have been growing to control quite a significant portion of circulating supplies, and that is obviously indicative of a chance for manipulation, because if you can corner a market, you can really manipulate prices. And I think that's where it's going to come from. I don't think it'll be institutional, because I think, that's kind of like it can't be a yes or no answer. It's not binary. I think that will continue to progress. But I think the main bulk of institutional investment will come when, backed launches and we come out of the Bitcoin bear market in a serious way. I think that's where institutional investment will lead.
Yeah, no, I agree completely. And do you think, as I do, that Bitcoin's market share is going to increase and consolidate a lot of the altcoin gains that have been made over the last few years, or do you see the Bitcoin market share decreasing over time?
I think it will continue to decrease. That is only because, it's quite an awkward measure, because you would have to be able to compare Bitcoin's market share from, let's say 2013, for example, to the same altcoins in 2018, 2019. But that's just not the case. We have like thousands, if not tens of thousands of new altcoins created on a yearly basis since that point. And so there's no accurate measure that can really be made against whether Bitcoin has gained or lost market share against those previous altcoins. And I think it will continue to lose its market share because we can just continue to create altcoins, and I don't think that'll ever stop.
Yeah, I see that for sure. It's just,
and I think that just that dilutes Bitcoin's market share, not in any sense that I think is really relevant, but it does in a real value sense, because if you have 100,000 altcoins on CoinMarketCap, all of a sudden Bitcoin's market share drops down to 10%, let's say. But what does that really mean if those other 100 altcoins, those other thousands of altcoins aren't really doing anything, and they're just speculative assets anyway?
Yeah, no, I agree, because that's my opinion anyway. It's like it's obviously such a nuanced conversation. As you say, it's definitely not binary. But I think that due to like the ETF and BACs and everything, these are channels that are opening up to put funds from traditional finance into crypto, and they can only go into Bitcoin. If it's a Bitcoin ETF, it's the only place that it can go. So necessarily,
you're right. You are right, and I think from that, going into 2020 and the new halvening and all of that's coming over the next 3 years, I think you're right that we'll get sort of a return towards Bitcoin dominance. But I think it's really hard to kind of grasp that when you're looking at something like CoinMarketCap's Bitcoin dominance chart, because obviously that's just listing more and more altcoins on a daily basis, which is going to dilute that figure. And I think really you're right in that Bitcoin's market cap will increase multiple times over the next 3 years if this institutional investment does come, like we all believe it is. But yeah, I think we're both right, really.
Yeah, it's hard. It's a very hard question to answer. I think
it's just gonna be cyclical, really. I think we're gonna, over the next maybe 6 months, see a drop in Bitcoin's dominance or market share, because I do think we're going to get some sort of altcoin resurgence over that period. But then, as you say, when BAC launches and we get the Bitcoin ETF, and all of a sudden hundreds of millions of dollars of investment can now be onboarded, there is only one way for it to go.
Yeah, exactly. But then, to be fair, it might diffuse into the market through the Bitcoin ETF.
Exactly.
In some form. Yeah. It just takes longer to do that. And
it'll take a lot longer.
Yeah.
And because the numbers are so big at that point, the extremes of volatility will decrease.
Right, yeah, because there's an equilibrium between supply and demand that we're so far away from at the moment.
There'll be so much more liquidity at that point. If you look now, even in the top 100 coins, it's only really maybe 20 that have liquidity that would be decent enough. for institutional investors to even get a chunk in.
Yeah, sure.
Outside of that, there's nothing.
Yeah, it's a fair point. And then moving on to the trading side of things. So I obviously came to you through the Alt Coin Traders Handbook, which is a book you wrote, which is basically summarizing your methodology about how to successfully trade on these markets. And I just want a summary from you. What are traders currently getting wrong in the crypto markets, and what steps could they take to be better, more professional, more risk averse, well, more profitable traders? Let's put it that way.
Yeah. So the first point I'd say is I don't think risk averse necessarily leads to a more profitable trader. I think the main thing that people get wrong is that they don't know themselves as a trader or as a person. Even they don't really have that firm a grasp of their own psychological profile, and I think that's the key in determining an approach, a successful approach, because it's not the strategy that is the winner, it's the person employing the strategy.
Right.
So the two main things I would say are risk management and knowing your own risk profile. So some people are naturally less risk averse. I'm not very risk averse. I'm happy to put 0.51% of my altcoin capital into a complete shitcoin just because the chart looks good and there's accumulation taking place on the rich list. Like, no fundamental analysis required. I just think that, this certain coin is going to do 3x, 4x, 5x over the next cycle. So I'm quite happy doing that. For the risk there is obviously delisting, exit scamming from the developers, all that sort of stuff. I mean, it's not something I do regularly, but I'm quite happy to do that. It doesn't make me uncomfortable. There are so many people who in that position, even if they're only risking 0.5% of their capital, would have sleepless nights because they think, wow, what happens if I wake up tomorrow and that developer is gone, or this or that? So I think people look at risk in the wrong way, or not in as broad a way as you can do. I think there's, I wrote a blog post on like a primer on risk management saying that most of us as traders look at risk in the quantitative sense, where we are looking at percentages and numbers and figures, but we're not actually looking at the qualitative aspect of risk, where we actually have to assess our own risk profile and find out what we're comfortable with. And I think knowing that is key to being successful over a prolonged period.
Yeah, makes sense. Makes total sense. Because some people shut down under risk that they make a trade and then it completely destroys them financially and psychologically, which is not what you need.
Yeah, and even worse, sometimes it doesn't destroy them financially, but it does psychologically. And that's even worse, because if you can't take a small loss that you've already predetermined because your mindset is not in that place, then what happens if you do take a 40% hit on your portfolio in a week or something like that? That can happen with small portfolios in altcoins.
So psychological profile is an obvious one. What other things do you think the traders aren't aware enough of?
I think that people don't exploit the transparency of blockchains enough.
Oh, that's interesting.
Yes, in traditional markets, we don't have anywhere near the degree of transparency, at least not real-time transparency, because publicly traded equities, you can see sort of insider transactions and director dealings and things like that, but they're not immediate, they're not in real time, and they're not quite the same as when you can literally search for a block explorer for any coin you're interested in, look at the top 20 and review all of its activity over the entire period that address has been generated since. That is powerful. You can literally track week by week. You can take screenshots of that top 20, and every 3 days, every 7 days, whatever period you choose, you can track the changes, and then you can map that onto a chart and see, okay, on these days this was occurring, on those days that was occurring, and that is really powerful. And I don't think enough people look at that.
Yeah, no, that makes total sense, and that is the beauty of, well, it's kind of it's a double-edged sword because it's the
Of
beauty of the
course.
blockchain, but then obviously the lack of anonymity is going to cause problems in the long term for the community.
Yeah, not just that, but it makes it harder for those. I mean, I'm talking from a complete speculator's perspective. Like this has, this is all to do with turning a profit on any given altcoin. So for me, I'm looking at it and going, this is great. But on the flip side, if you're the person or the group of people who are looking to manipulate an altcoin and profit from it, having that transparency is actually a bad thing, because all of a sudden people can see exactly what you're doing and on what days.
No, it's a very good point. It's something that, to be honest, I haven't really exploited myself. And this is a great conversation because it's trading something that I want to move into more myself. So I'm using every opportunity within this conversation just to kind of draw down from your wisdom. Could you just explore a few of the aspects of your methodology for good trading and the different practices that you've perfected over time?
Yeah, I mean, to be honest, I would say the most important thing that I you've read the book, and I would say the most critical thing that I emphasize is that, one, people begin with money they can afford to lose, because that's the first psychological hurdle. Mm-hmm. And then from that point, if you're not using leverage, which you don't have to in altcoins because of the crazy volatility, then you have unlimited time for your trade to play out. You're not being charged financing fees. So the game is really about patience, and it's as simple as it gets. You literally just have to look at a chart, see price range bound at historical support, and from that point you can then map out fundamentals if you so wish. I mean, I have transitioned to that more so recently over the past 6 months, but really it's just about being patient. You find cheap altcoins and you hold them until new cycles play out, and then you sell them when they get expensive. That's all I do. There's obviously multiple ways to determine what exactly is going on, but that is in essence what you're doing. And because you're not a slave to financing fees or overnight charges and things like that you are when you trade with leverage, you don't need to worry about being liquidated or price going the wrong way or anything like that. You literally just need to, as is time-tested wisdom, buy cheap and sell when things get expensive. And that's pretty much all I look to do. And in the book I lay out how I go about it. But as I say, the main things I tend to look to are the rich list, the chart, and then just some general metric analysis, and then from there I'll go on and do further fundamental analysis. So enough. if you want me to go into those metrics, I mean they're all on the blog, obviously, for people who do read it. But I look at exchange volume or exchange volume over the past 30 days, because that gives me an indication as to interest in that particular coin, and then I'll pair that volume with the market cap or network value, however people like to call it. And if average volume for the past 30 days is over 1% of the network value, then that is indicative of some significant interest in that coin over the past month, particularly in smaller coins on lower volume exchanges where you're like, wow, that's actually significant. And obviously these are all relative terms. You have to then compare it against other coins and to figure out what is unusual and what is common. And then I also look at liquidity. So I'm looking at buy support in the order books, which is another tool that people don't use. The transparency of the order book is that you can literally look at the framework of those who have a significant position, because they have to place their orders in the order book, right? So everyone gets to see exactly where those orders are being placed, and you can go all the way to the back of the order book and see, right, so all of a sudden there's 10,000 of whatever altcoin which amounts to 10 BTC, and it's in increments of 1,000 Satoshis for like 5 pages of the book, that's significant. You have to note that down and think, right, maybe price is going to get to those levels in the future.
Yeah,
there's a massive information there, but yeah.
No. I think it's exactly what people want to hear, because obviously cryptocurrencies aren't going anywhere, and despite the market taking a downturn, I think crypto trading will be, it's a genuine career path for people in the future. And your book and your methodology is a great stepping stone for people who just don't know where to start, how to make heads or tails of this thing.
Yeah, and I think on your point about cryptocurrencies not going anywhere, I think I tweeted the other day saying that I find it bizarre that people think that altcoins are just going to die out and it's just going to be Bitcoin and a handful of others. Sure, it might be just Bitcoin and a handful of others that are being used, but we've created a profitable mania with altcoins. And considering that there are countries where exchanges don't need to be regulated, why on earth would this casino stop? Whilst there's a profit incentive, there will always be those there to manipulate price and capture that profit.
Agreed.
And if you look back through the past 5 years, many altcoins have lost 99% of their value multiple times in their history.
Yeah. Well, it's just as you say, it comes in cycles, right?
Yep.
Yeah, true. And at any one time, how many coins do you own roughly? Like, if you had to take an average over your trading lifespan?
So I would probably say it's between 25 and 30. Sometimes it gets ridiculous and I have like 60. Sometimes I'm on like 12, 15. But in general, between 25 and 30.
Still, that's a lot to keep an eye on.
It is a lot. It is a lot. And, it comes with all its nuisances, meaning you have to think about where you're going to store these things. And yeah, it's just a pain, but it's just what works for me.
25 to 30 is pretty remarkable. And what currency are you most bullish on? I know obviously asking for top picks is such a cliche thing, but I am curious, what is your most bullish cryptocurrency?
Yeah, so if I was going to say over the next 6 months, I would say Komodo, Stratis, and Arc. Those are my top 3 that I think will just do bits, basically.
Right, and is this because of technical analysis or fundamental analysis or both?
A combination of both. I think those are the 3 that present the highest reward with the lowest risk and the highest probability of success based on all possible technical and fundamental aspects from having researched them myself. That's what I would say.
But this is not financial advice.
Of course not.
We have to put that in there just so no one ends up suing us.
Of course.
Yeah. And out of curiosity, what do you think was the trigger for this most recent bear market? Have you been able to do any analysis on it over this?
Shit got expensive.
Yeah, just too much.
Honestly,
inflation.
I don't think there was anything that triggered it. I think it was what we see everywhere throughout history. People got greedy, people got euphoric, and then there has to be a crash. Whenever you go high, you have to come back low. And we got really high. The space grew from 9 billion in total market cap to 840 billion in 13 months.
Yeah, that's crazy.
That is absurd.
Crazy money.
So, I mean, in real terms, that's not even that much. The crypto space will be a multi-trillion-dollar asset class at some point. But to go from 9 billion to 840 billion in such a short span of time, I mean, that is insane. And within that, coins would have gone even greater percentages. So it was just inevitable. But the problem was that people like myself we were ignorant and stubborn, and we were looking at altcoins versus Bitcoin, because that has historically been where we look to see exits, entries, all of that sort of stuff. What we didn't think about was the fact that Bitcoin was extremely expensive relative to where it was a year ago in January 2018. So altcoin USD charts were just unbelievably overbought, But most people weren't paying attention to that, myself included. And had I have been, I would have saved myself, I would have captured far more profits from that period than I did. And I think a lot of people would have been saved a lot of pain. And I think that's something that has definitely come into my approach over the past 12 to 18 months. Is I'm looking at everything now to see where things stand relative to others.
Yeah, that's fair enough. And as we said earlier in the interview, that you are accumulating Bitcoin primarily, all these trades that accumulate Bitcoin. Have you made any price predictions for the future value of Bitcoin, or are you just presuming there's a general increase?
I just think, I don't really have a target necessarily for Bitcoin. I do think that we'll exceed the January 2018 highs. I don't think we'll go as ridiculous as, some people going like $1 million+ per Bitcoin, and maybe it will happen. I'm not one to say it wouldn't, but I don't personally think it will. I think if I had to, if you had a gun to my head and I had to pick a number, I would say that over the next 3 to 5 years, maybe $80,000 to $100,000 per Bitcoin would be possible, which is still insane from where we are now. You're talking about a 25x.
I don't honestly think it's that unreasonable, to be honest. And the reason,
I don't either.
The reason, like when people ask me what I think the Bitcoin price is going to be, I say, listen, I can't give you a number, but there's two variables that I think are most important. One is how wide and how many channels open up from traditional finance into crypto. And the second factor is the stability or the perceived stability of the current financial system. Because if there's another 2008 crisis, and by that point the channels have been opened, like get ready, like it's going to be a bull run like the world has never seen. But
I agree.
But if the economy pretends to keep doing well like it is doing, and the channels remain closed, like the ETFs don't get approved, then we might be floating around the same price 3 years down the road. It's just
it'll be much more muted. Yeah, there are so many variables. I think obviously, as a deflationary asset, its general trajectory is upwards. It's just whether the extremes of that are in one place or another. And I would say, I think you're right that it is so dependent on those two variables in particular. But I think that if we do get another 2008, and even if all those new channels are open and that infrastructure is built, I still think that the first 6 months will be painful for everything. And then we'll get our, flight to the safe haven, let's say. Because if you look at 2008, same thing happened with what was considered a safe haven then. Gold and silver crashed along with the equities market. And then, as things started to turn, we got the bull market that came for gold then.
So why was that? Because as far as I understand it, gold worked in an inverse relationship to economic performance. So I haven't actually checked the charts, but I would have.
In general, that is how it works. But I think because that 2008 was so monstrous, and there were so many, with Lehman Brothers, that was such a catastrophe for the entire world, that there was just too much uncertainty in general, and everyone just wanted to be in cash. And then, we got a near two year bear market for equities, but we got a 3 to 6 month bear market for gold, and then it swiftly rejected and began its ascent to what was it, like $2,000 or whatever it got to in 2010.
Yeah, it's just so interesting that the first instinct was to move straight into cash. I
know. That's like, looking back, I'm like, wait, I would have thought as soon as September 2008 hit, I would have thought, wow, this was just gonna fly. And instead, you look at the charts and things go down, and then they go up, and I'm like, well, what happened there? And the only thing I can think of is that there is so much economic uncertainty and financial uncertainty that people just wanted to be in cash until they figured out what was going on.
Right. Okay. Just to see, they didn't want to make any irrational and impulsive decisions, I guess.
Yeah. And I think there's because crypto is so new, I don't think we'd get such an immediate safe haven response. I think we'd get another 3 to 6 months of, wow, we don't want to be in cryptocurrencies because they're a volatile asset, and then all of a sudden people think, wait, they're completely unrelated to our current financial system, and then they flood back in.
Yeah, I just think it depends on the severity of the crash. Because what happened in 2008 was only a fraction of what should have happened in 2008.
Yeah.
And because of the fiscal policies from global governments, they just kicked the can further down the road, and we've still.
Oh yeah, we haven't quite hit we haven't quite dealt with what we should have back then, for sure.
Yeah, and so it's inevitable that it's going to happen. And seeing as these cycles seem to work on a general 10-year like cycle, we are due this crash. But this time, I don't think we actually can keep the financial infrastructure in place like we did last time, because the governments can't afford to bail out the banks again, not to the extent that they're going to need to.
No, and corporate debt and household debt is like 4 times greater than it was in 2008.
Well, that's how fractional reserve banking works. It works to pay off debt with debt, and
debt, exactly.
There's a certain critical threshold where debt can't be paid off by debt anymore, and then the whole system implodes. And the question is that this week, or is that in 2 years' time, or is it in 5 years' time?
Or is it in 10 years' time? Because you just can't time these things.
Yes, and there is also, to be fair, quite a lot of, because it's all worked through animal spirits. It's all worked through how the people in society perceive the economy to be doing, as mediated by the media. And the media has such a good, it's working so well for the banks at the moment. They're not calling the alarms on all of the illiquid banks or the toxic assets on their books. You know what I mean?
Yeah, I agree.
And so my final question to you is there another book on the way? And if so, can I get a signed copy?
I'm definitely going to revise this book, because I think there's so much that has happened over the past 18 months that, one, the manual side needs to be updated, and 2, I also want to add in all the anecdotes from the past 12 months into the memoir part of the book. So I'm definitely going to revise it this year, and yes, of course, you can get a signed copy.
That sounds brilliant. Right, I really enjoyed this chat.
Sweet.
Yeah, man.
Thank you for having me on.
Yeah, no worries.
Cheers.
Take care, buddy. Bye.
Thanks for watching. Don't forget to subscribe to our channel and share this video with your friends.